Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look as usual on the euro currency. So it's a really interesting situation right now on the euro in the long-term perspective. And today I have read the new report from the FETM Consulting. They expect a world recession in 2020. Based on this assumption, the crude oil price could drop to the $20 per barrel. So it's very thrilling analysis and expectation, and it really could impact on our long-term view on the dollar index and on the euro currency as well. So I have put these thoughts and some material in our forum in the weekly report. So it's really interesting. In a short-term perspective, euro shows really nice performance, as you can see, to the upside. Actually, we haven't got any reasonable retracement last week and ability to take the long position. But still, it doesn't mean that this will not happen, because odds in general suggest some pullback. If we'll take a look at the weekly chart, as we have mentioned also in the report, we have the morning star pattern. It's big morning star pattern on the weekly chart, and usually it acts in the same manner as the engulfing pattern. And in more than 50% probability that market shows some retracement back inside of the body of the pattern before upward continuation starts. And this makes us think that our retracement is still ahead. At least currently, we will specify what levels to watch for and what signals to watch for from the market that will confirm this idea that retracement really could start. Currently on the daily time frame, trend is bullish, as you can see, but market is struggling with the cluster of the 618 fib levels. So we have started from this fib level in the beginning of the week. Later, market's climbing slightly higher. We have talked about this one. And now market comes to the major level. It's major 618 resistance. Why it's major? Because, guys, this level is based on this nasty black candle that has been formed in June. And in fact, the range of this candle was keeping price action within the mostly than 2 months. So that's why this extreme point of this candle is very important. That's major 1640 fib level. The market right now stands right on it. It's also daily overbought is near. That's why we suggest that taking it's all together, the stuff that we have on the weekly, on the daily, we still think that it's not the zero probability that the major pullback still happen, and we will get good opportunity for taking the long position. So on the follow time frame chart, market was climbing back to the XLP target. Here we also have hint on the possible bearish divergence. We also suggest our idea of the possible retracement. As previously as right now, we are watching mostly for a confluence. That's our primary level to watch for as a retracement destination. It's 1490, 115.10 is confidence support, and this will be the first level that we'll be watching for as opportunity taking long position. On the hourly chart, guys, we need to keep an eye on a couple of levels. So on Friday we said that if market will move above this top, this will tell that market will move above this top as well, because that was the C point of our ABC pattern, if you remember. Those of you who have seen our Friday's video, and also this was the hint on the hand shoulders, and we said that's an important point. If market will exceed it, it's probably upward action will continue. Market should take it out to this top. That indeed has happened. On the comments from the Fed Chairman Powell, you can see market has jumped up close to the end of the Friday. And currently, guys, on the common week, we need to keep an eye on two levels. First one is 1647, 1650 approximately. It's 127 extension of this leg, of this retracement. And next one is 1680. This is 1618 extension. Why we should keep an eye on? Because market stands at daily overbought. It stands at major resistance. We have the morning star pattern on the weekly. All this stuff suggests some retracement. And these two extensions are typical for the hand shoulders pattern. That's why also we have the hint on the possible divergence with the MACD at the major resistance on the 4-hour time frame chart. That's why any signs of weakness here or here will tell us that hand shoulders could be formed. and our major retracement still could start. That's why that these levels we should keep an eye on. Breaking of the 1680, 117 area, if market will pass through it, it means that market will come directly to the next major resistance cluster. It's 118, 118.50. This will be the neckline of our large hand shoulders pattern that we are watching for. So that's the simple conclusion that we could make right now on the overall situation. That being said, in the beginning of the week, we are watching for these levels for a possible reversal. If market will not show any reversal and just will continue to move higher, it will mean that we are coming to the 118.50, 119 area. If signs of weakness here will appear, market starts dropping lower, back to the 1535, this will mean that we will still get some hand and shoulders and A, B, C, D retracing back down. That will let us to take the long position. In this case, we will be watching for first is this level, next one is 1430. So also it's possible if we will get a kind of the large cardless triple to buy. This will be a very nice opportunity. So this is approximately the trading plan that we will follow in the coming week.